2, 1. Event has occurred.
Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a audio and screen check in Discord and the Bookmap YouTube? Thanks, Stephen. How we doing in YouTube? We all right there? Thanks, Dan. Okay, everybody, let's keep our fingers crossed. Welcome, everybody, and thank you for stopping by today to visit the Trader Lab. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis to overlay structured trades in the intraday developing time frame. These trades are codified. They are available to everyone. There are 60 PDFs of these trades that I narrate here in the stream, plus a lot more, actually. That's available at no cost in the Bookmap Discord Trader Lab community. In addition, besides the PDFs, there's a library of webinars and, of course, the Trader Lab community, which is a group of like-minded traders who've come together to leverage their collective experience. The Trader Lab is focused on helping traders understand what this business is, how the market works, why it does what it does, and how at times you get in alignment with it, and understand the true nature of the business. Most of us come into this business, we don't understand what it is, and it's a lot different, I think, than many retail traders imagine it to be. It is a unique environment. Obviously, it's different than the world we live in every day, but it's much more like gaming or how a casino operates. The thing most of us are driven to do because of our psychology and emotional wiring is to seek certainty. So we spend our lives, if you will, in trading world, trying to put together a mix of indicators and time frames and get certain. Well, if you take that concept and compare it to a proven business model, which is gaming, they do not look for certainty. There is no certainty. And if you're here in Trader Lab and you're visiting today in YouTube, grab a pen and paper. Write that down at the top of your sheet. There is no certainty. If there was certainty, the casinos would already have it, wouldn't they? If they can operate in an environment of total uncertainty, then maybe we should use that business model and overlay trading and follow a successful model, then model our process. Looks like our long here is working out, and go from there. Anyway, I've got a lot to talk about today. I appreciate you guys stopping by this Friday, post FOMC, and let's get into it. And I have a special announcement for you guys on that I'm going to share with you in just a moment that you definitely want to pay attention to. It's a special series of advanced webinars, and it's going to be exclusively for subscribers to the Bookmap Discord, and you need to be verified, as I say every day. And Of course, you're invited to visit the Trader Lab also at no cost. All of this is available at no cost, but you must have not only be registered, but you must confirm. And I'll show you that in a moment. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room, but if we get there, we don't call trades, but we do observe them in real time. And remember, this stream is based on structured trades, and those trades and library of webinars in the Trader Lab community is available to all of you at no cost, plus additional education. There are links in the bottom of YouTube. You can take the link and visit the Discord, and you need to confirm your email address so we know you're not spam. And in addition, there's a lot of additional education in the Bookmap server. Stocks, options, crypto, order flow with a high-tier tool like Bookmap. And one other little tidbit, and this is something I always want to remind everyone, especially if you're in YouTube. Have you ever wanted to try Bookmap? Now, I'm not here to tell you it's the Holy Grail, because anyone who has been trading knows there is no Holy Grail. But I will say this to you, I would not trade without it. And I'm going to show you how I use it here in the stream. And if you're interested in seeing how other traders use Bookmap, you're invited to attend the special Pro Trader webinar series. And these are traders you have probably never seen before. And if you're in Discord and you haven't confirmed your email, you won't be able to attend this either. So let's get those confirmations out. Click the link, verify in the Bookmap Discord server. Come to Trader Lab. Become part of a great community. There is no cost, but you do have to confirm. And there's going to be a lot more specialized streamers, and myself, I will be doing, as you guys know, on an ad hoc basis, exclusive streams for Bookmap subscribers. Now, how do you become a Bookmap subscriber? Go to bookmap.com, but here's the thing. There's a free digital version. Now, I don't know, this is to me one of the best kept secrets on the planet. Whether or not you want to subscribe to Bookmap, I believe it'll depend on what you see in these streams and how professional traders use a high-tier tool. Should you subscribe to it? I'm going to say maybe not, because you might be a trader who's going to depend on red light, green light, which is what most retail traders do. And I'm going to suggest we know the statistics for most retail traders, and it's not very good. Most retail traders do the same thing. I'm going to suggest that you can learn from your experience, right? But you also have to learn and not keep repeating the class. I know for me, and I've been doing this almost 45 years, I spend too much time going down the same dead end, not recognizing it as a defective process, thinking that persistence was the answer and the solution. Well, I dubbed that, I created a name for it called Trader Groundhog Day. Trader Groundhog Day is working hard and waking up with the same result. So I had to look at what I was doing, and I had to say to myself, well, can I learn from what I'm doing, and why is it not working consistently? Where it does work inconsistently, we all get winning trades. So when you get a winning trade, you go, okay, I'm on the right track. Isn't that common sense? So I'm going to share with you today what we do in Trader Lab, why it's different, and why order flow is so important. Then you can get the free version of Bookmap or not subscribe to Bookmap. That's not my place to say that to you. But what my place is to try to help traders develop an edge, and to understand the business of trading is based on edge. Now, how do you get an edge over other traders? You have to do something different, because if they're all doing the same thing and you're doing it and I've done it, then we have to differentiate between what gives us an edge and what is just noise and randomness. And even though we have winning trades over a large sample size, we're going in the wrong direction. If that's you, then you want to pay attention not only to this stream, but to the other opportunities for you to observe high-tier tools in action. And then you determine, do you want to invest in learning how to use these tools? And that's all I've got to say about it. Normally, I don't say anything about it, but I just think it's so important because I have passion not only for this business, but for helping traders build the business. And understand, my desire to help traders does not assure that anybody will succeed, except we have traders that are now in the business of trading in the Trader Lab. And not every trader can master this. And it's not that it's so complicated, it's that it's random. That is the obstacle for us. Randomness and uncertainty. The uncertainty triggers emotional responses, fear, panic, FOMO, runaway. All of those things are triggered by rotations that are random in a random environment. You're stepping into some place that's like landing on Mars, and that's what trading is. So in order to work in this environment, you have to change not only your beliefs, but you've got to train yourself how to react to it. Now, I'm going to talk about the current market when we get to it. Currently, I'm sitting in long positions from down near the low of the day, and nobody can pick the low of anything. I'm in what's called mean reversion, and mean reversion is outside in trading. Now, we're going to talk about that, and let me give you some statistics. Grab your pen and paper, and we will go from there. We opened inside or lower inside of yesterday's range. Let me show you. Here's the RTH open. Here's the ETH low. Yesterday's low. So, wonderful, right? This is the overnight volume point of control. This is the highest volume in the ETH. Here's some probabilities. There is an 82% probability we will get here. And these are just statistics. There's nothing more to it than that. Taking out the previous high or low is almost an 82% probability. You have to vet these for yourselves. These statistics are available exclusively to Bookmap Discord Trader Lab participants. The ETH mid has a 72% probability. The ETH high, a 69% probability. Whoop. Overnight mid is here, and then we have the ETH high. We have the ETH low. Let me get you that one. 49% probability. So the skew initially is to the upside. So let's look. So we open the day, and we know a couple of things also. Let's talk about what's not in the statistics. Statistics are generic. It doesn't matter that we had FOMC, that we had a 50 basis point cut, that the world got bullish, everybody lost their mind. And of course, the market goes up to go down, and the market goes down to go up. Write that down. What did we do yesterday? The market went up, then it went down. Actually, it went down and went up. Sorry. Market went down, then it went up, then it closed in the middle. That's kind of like a standoff. If you look at yesterday's candle, you got wicks on both sides, and you got a little body in the middle. This is sort of like a standoff. Imagine two armies that are looking at each other across a trench. Well, what does that say? Well, we come into Friday. We have longs in the market from yesterday. The sellers sold down, so we can have a couple of things. When we open inside of yesterday's range, but we're below yesterday's volume point of control. Let me tell you what this stuff is. This is the settlement, and this was the highest retail price from yesterday. Now, let me give you one more statistic. Sorry, wrong side here. I might have quoted you a wrong number here. Let me just make sure. 83% for the overnight volume point of control there. Previous volume point of control, 70% to get there. ETH high, sorry about that, guys. I got a lot going on here. 49% probability. Overnight mid, where are you? 83% probability. So we're leaning to the upside, and we have an 85%-ish probability to take out the previous high or low. Okay? So I got this 85% probability. So obviously it's, you got a bit of everything. It's like a smorgasbord of statistics. Let's go back to yesterday. Mexican standoff, call it a standoff. Doesn't have to be Mexican, but you know where the term comes from. The other part of it is Friday, longs in the market, neutral-ish kind of standoff yesterday, and longs in the market Friday. So we're adding a little more flavor to the smorgasbord. Now, so coming in, my statistics favor the upside. So my first trades I'm looking for is to take, I have to see who takes control. And now I can play either side in this. Okay? So my first trades are going to be the longs. Let's look. So market opens here. Actually, let me change that. The market opens. My overnight low is here. It's very close. And then we have the overnight mid. So my first trade was a short. I forgot all about it. And then I'm going for the 85% probability, which is yesterday's low. And I have no clue because nobody does. If you have a clue, come to Trader Lab. Let us know your clue because that means you can predict. Me, not so much. So this is the RTH open. This is developing volume point of control. Now I'm going to show you trading in fractals. Hold on one second here. I got to pay attention to something I've got going on here. Normally I don't have positions on when I'm streaming because I cannot multitask effectively, but I do have a little something floating in here. But it's doing okay. Sorry about that. See, I'm not a good multitasker. So I'm looking here. So the market opens, I see my buyers. Now, obviously the market can do anything. So clueless. So I'm looking for statistically longs, but I can't buy this. But I also have this sitting right here. So I'm looking for longs, but this is pretty close, the ETH low. What might be under the ETH low? Well, stops, right? Maybe. So I'm looking for, do I get volume coming up? This is the developing volume point of control. Now, let me explain what you're going to see here. This is the quote retail price. And the metaphor of all this is shopping. Trading is shopping. You didn't know you were coming really to be in the shopping business. You thought you were going to be a trader. Well, trading is shopping. The difference is when you go to the store, the prices are not moving at this velocity. They are pretty stable. So if you have a retail price in the store, it never changes unless they put it on sale, then the price goes down, then they can bring it back to retail. If they raise the price and you're not willing to pay it, you're going to run out of buyers at a higher price. It'll come back to retail. This is what creates our rotations. The other part of this is, think Russian dolls, fractals. A fractal is what you guys call a multiple time frame. I just don't use time because it has nothing to do with this, mostly. There are some elements of time, but it's more participant behavior based. So then the order flow, this is where Bookmap comes in. So I'm sitting here and I'm going, what's going on? You ever ask yourself that? I'm constantly doing that because I don't know what's happening until I can define it based on the way I measure the interaction of the participants. This here, now this is the stop and iceberg detector. So let's see what we see here. Market opens, lovely, going higher. What do I see? Now here's where the order flow comes in. This is delta, green bubbles. So aggressors. Now delta's made up of, let's just assume, initiators and stops, because market orders are what are delta. So if I see delta buyers, I don't see icebergs buying down here, but what do I see on the other side? Let's look. This is absorption. What this is showing me here is that there's a passive side, and who are they? Icebergs. These are limit icebergs. They are executing there. So I see sellers. Where's my buyers? Well, I see the buyers in the delta, and I will tell you that I can surmise that if I don't get below this, why is this not going lower? Here's the answer. there's the limit order book is the passive side. In other words, what are limit orders? They're not in a hurry. Yeah, I'll hang out if I'll buy it if you come to my price. Otherwise, the heck with you. I'm not going to buy it. You can, sell it to somebody else. So they're over here. That's why you get this. So what happens here is buyers are here, and you don't know it until you're above these sellers. So this is now order flow. Limit buyers are here, hidden. Motivated buyers are here. Sellers are selling into the buyers. So this is how the order flow now is helping me. I'm going, wow, that's nice. What are these buyers? Buyers are taking on the sellers. Looks pretty good. It's going higher, right? At the moment, it certainly is. Now I come up here. Now I see a seller. Now I had a seller here. Why didn't the market go down? You're asking. Why did the market not go down here? Because the buyers absorbed the sellers. What happened to these sellers here? Why didn't we go down? The buyers absorbed the sellers. Sellers are above the buyers, I should say, are above the sellers. Buyer, 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 going to the moon. Right? How would you know? Don't. So there's no holy grail, guys. But can I get closer to it here? So I'm thinking, well, either a long or a short. This is closer. So I'm looking for an indication of change. Right here, I have microstructure. Now, I don't know what it is until it breaks. Once I break here, here's what happened. Passive side is here. No way to know. At least I don't. Buyers are here. Now, this is minutia. This is order flow. And I can open this up. Here's the beauty of having a tool like this. I'm just telling you how I use it. Now, there's other ways I'm sure to use it. I just use it the way I do because you're going to find out how you might want to use it. Here's what I see. Nothing up here. And I see aggressors. Now, what is this? Buyers. But what is that? Buy stops. So I don't know, as we're coming up, there's 23 buy stops there. There's more buyers, but are they buy stops or initiators? I don't have the answer to that. But here's where my answer starts developing. I have a buyer here. I have a buyer here. Aren't we going to continue? When we break low, these guys then were absorbed. I don't know it. I suspect it. But when I break below this is too high. I come up, I test, there's my selling. Now, this sets up a short for me. And I took a short, and I'm going for this, and then I have a target at 38, or to yesterday's low, I should say, and then 38. So this is my first target right here. Okay? So the short, to there. And now I'm going for, based on the probabilities, this. This was my target, okay? And all this is posted in the Trader Lab. And then, if we got under here, and I posted this also, this was the next target. Actually, I have it mislabeled. It's 38, though. So 38 was the next target for the short. And all this is in Trader Lab before the point. But the fact of the matter is, it doesn't matter, This is trading. I mean, there's no prediction. But if you're using volume profile, these are levels that are created by the participant behavior. So now let's look. Target. So for me, this is where this trade fails. I'm going to label this because this is where the high volume is. It's right in here. So think of this like an auction. So chop, and it's, when you get this, so this is a micro consolidation, chop. Break low is a trigger. Pull back to where the sellers took over is an entry, and your stop has to be out above here. Because you could get this. The buyers try again. Now, here's something that I want you guys to think about, and it's very important. Take a note on this. Most of us If we get a short here, which is what the trigger is in the trader, this is Trader Lab trigger, you would put your stop there. But what can the market do? If we rotate, we can come up and test this. And here's what happened here. Let's go back and think about this. Now, I'm going to move away from all this kind of micro minutia, but it's important to lay foundation out. I know there were sellers here. Now, retail traders are going to use a shoehorn. I usually give it a couple of ticks. Let me tell you why. If I counter rotate, and what is this? This is the mid. Don't we get mechanical retail mid buyers? And they can be right. That's what this is. Oh, it's the mid. Let me buy the mid. And they might be right. I mean, nobody has a monopoly on right or wrong. Well, for me, I'm playing this, you see, statistics. So I have something most retail traders don't use, and that is not only an understanding of how the market works, but also probabilities. And that's the best you got. After that, we're all clueless. Not ignorant, but clueless. So here, why would I have my stop over this and not add it? Because there were passive, let's think of the logic. Passive sellers were here. We can't see them until we see what happened. Why is this green bubble here? And here and here, what are they? Buyers. Why didn't the market go up? Passive sellers. If the sellers thought this was a great price to sell, if we come back here, might they activate again? There they are. So the sellers that were here, that absorbed these buyers, are here. Same guys. Oh, really? You're giving me another shot? Thanks. Mm-hmm. Now this is mean reversion. Now this is the target. Now you get the whole rationale behind this thing. So this is the scale, and I'm holding for yesterday's low a day because what do I know? One moment. So I'm thinking I'm doing fine here, right? Stop is here. We pull back here. As long as I'm under this, I'm good. Test the low. Looks like it's going to zero. And guess what? Not so much. I get taken out. Where? Right above here. So I got this. I got this. And that was very, very nice. It was a lot of fun. So as soon as I come across, now I'm turning around and I'm going long. What am I going long for, you'd say? I'm going for this, the overnight mid, which has, I'm following statistics and the auction, 83% probability. And then I'm going for the next target, this, about an 83% probability. So what it was is shorts, looking for it to take out yesterday's low, no bueno. Checks this. I see the reaction, and this is too high because this is where we took the short from. I test it. Notice the reaction. Right here, I'm okay. I'm going, all right, come on. Ever talk to the market? You'd be surprised the language I have. And then when I break here, then the trade's over. I go, okay, now what? Well, that might be it. Now I've got to turn it around. So now I get long. Let me show you where. I get right here. I take a long. Right here. And I scale ahead of the overnight mid. Actually, I took it there. Let me just remember what happened here. Something weird happened here. Oh, yeah, okay. I got my scale ahead of the overnight mid, and then I'm going for the overnight VPOC. That one's scratched. So I ended up with a target getting taken out. I took a long, got a scale, got taken out. And then once this is going on like this, then I'm in what's called two-sided trade or mean reversion. It's the least favorite trade if there is such a thing. So now here's what I've got. Let's go back to the microstructure. Now I don't know. You know, I put the trade on. I just put the trade on. I wish I knew more, but I don't know. This is called VPOC migration. Now, right here, the market comes up, and this is a very hard trade. I was posting quite actively this morning because this is very difficult trade. It's two-sided trade. And when you recognize you're in a two-sided rotational trade, in the Trader Lab, I share, structured trades. The thing that drives the trades that qualify in this is something called context. And the context started out directional down, so you're going for shorts. Then it turned around and it looked like we were shifting to directional up, which set up the longs. And then once you cross back again, then you're into this rotational trade. As soon as you know you're in rotational trade, it's called mean reversion. There's no inside trading. It's outside only trading. So it's a separate trade plan, and you could learn this in Trader Lab. So we come up, we squeeze. Here, let's watch. We get VPOC migration, we break low. That's saying this is too high. This sets up a short in the Trader Lab. This is an outside edge. This is a short, and this sets up outside again. So, and I was talking shorts all morning, and there's other traders taking longs. That's what makes it so much fun, or not, because there's no right or wrong in trading. What there is your trade plan. So for me, and I'm going to label this. This is a variable high volume node. Now I'm thinking that we're going to come out and get, looks like my long here is, what are we doing? Well, we're not doing anything. Let me show you this. Got to get focused here on the stream. Sorry, guys. Okay, too high, break, test. So let's go back a little more here. I'm going to take you a little more down in fractal. So this is very hard. So, this here, very tough. Now let's look at the microstructure in here. So what I do is I look at this stuff. Now, you could be looking in here, break high, nothing to do. Looks like, we're going to go to the moon, right? This is a trigger. Pulls back here. This is too high. I have the volume point of control here. So think fractals in multiple time frames. I break low. So this is too high relative to this consolidation. This is all the volume for the day. And if I don't push off it and get past this, then I'm going the other way. So this sets up a short, and then we're trying to come back down to here, right here, because this was too low. The volume is here. I broke away from it. These sellers down here were absorbed. So if I come back down, I have to scale here. I break low, I test. Looks like it's going to my targets, which who knows, which I'm going for this. You do remember, and why am I going for the yesterday's low? 85% probability I either take out yesterday's high or low. Well, considering I'm closer to this one than the other one, I'm going for this. So that's why this and then 38 was kind of the extended target. But this is a really nasty trade, because you'll see why. Let me show you some more of this. So this is a short. This is VPOC migration. If I don't get above it, it's still a short. I come down. This is micro high volume. This gets more complex, guys, because we're in a rotational environment here. This is also another trade I'm going to discuss with you guys. Again, I'm getting into more advanced processes. It's kind of hard, if you're not familiar with this. So let's look at it. So right here, let's talk about language. I don't use any indicators. What I'm doing is reading a foreign language. You guys, if you're using indicators, and I have nothing against them, but really what you've done is handed off the translation of market behavior to backwards looking non-contextual sensitive indicators. So it's almost like you have the Google Translate going. The thing about it is the market is not that one-dimensional. We can read behavior, but we need to understand how it all fits together because we're in multiple time frames. Imagine having three or four Google Translates speaking to you at the same time in different rhythms or at different speeds. It would be garbage. It'd be noise. It'd be very confusing, wouldn't it? Because many voices are speaking with many indicators. In this process, and this is just what I do, I'm not saying it's what anybody should do, the indicator's not relevant to me because the indication of what's happening is right here. Because this is the input to your indicator. For me, this is the output for making a decision based on my understanding of market mechanics. The market mechanics are what create the output to your indicator, which is backwards looking, potentially conflicting, and random. If the market's random, something needs to be anchored. Anyway, different conversation. This is what TraderLab is. So this is too high. I break low. I come back and check. What is it? Too high. This is my resistance. This is my resistance. Notice, too high. Developing volume point of control. Bouncing around. But what's in the shorter time frame or fractal? This is too high. I drop down. This is now my retail price. I come up and test it. It's also the mid. How about that? Too high. Test. Too high. You'll see how all this eventually comes together. And there's nothing perfect, guys. I wish it existed that somehow we have figured it all out and we can eliminate the trades that don't work. Casinos would love to figure out how that the gamblers don't win anything, but they see it as overhead and costs of production. So this is support. So let's watch. Break low, test. Right here, still going down. What am I going for? Yesterday's low. Remember, next target. Yesterday's low. Okay, I get yesterday's low. Now there's a couple possibilities. Right here, we're going to get short covering. Maybe that's the end of it because there's going to be stops under yesterday's low, and then we can, go north of the border. So that's one piece. The other piece is we took out the first half hour's low, 9 a.m. Central Time. If we take this out, there's approximately a 70% probability we will take out the first hour's low that is set up at 9:30 Central Time. Write that down. So here I get the short covering. Okay. And for me, now I have runners in here going for 38. And I posted that at the crack of dawn this morning. And I thought, like everybody else, I probably should have got long here. So what I did is I covered, and then I'm going, maybe that trade's over because I'm clueless. So I'm thinking about getting long. But what's too high? This. And this. So I posted in the Trader Lab. Let me explain this to you. Now, this is more complicated than I like to get into, but let's talk about, again, language. This is a auction. And think about a consolidation is an auction. That's all it is. What's too high? What's too low? In other words, the buyers. And what's retail? And if the shoppers in this store or consolidation will not pay for this, they're going to leave it. I'm not paying that. Get in the car. Go down to the next consolidation. What do we think of this? Nah. How about this one? Which is right here. You see this consolidation? Well, that's the same. That's this. So we rotate. There's the retail price, right? Let me get it. There. In this. Let me show you where this all comes from. So the volume is here, right? In my long is hanging in there by its teeth. So this was too high. Okay, so we break. This is too high. We break. We test. Needs to go lower. You come across, trade could be over. Now let's come back to what was too high. It was this, right? This. Too high. This is too high. VWAP in mid. Here's the other part. I have to give you the other piece. You see this divider right here that we fell out of quickly? That creates low volume. In other words, it didn't stop and do the chopateria. The chop is an auction. You know, this kind of stuff, it's like, is that too high? Is this too low? What do we think? We're out of here. You see? But when it just does this, there's no auction there. It just ran. That leaves what's called a low volume node or area. Now, what that is, it's not a wall. When I first learned market profile in mid-1980s, I thought this was resistance. In a way it is, but there's something else about it. It wasn't auctioned. So what sits here stops at these outside edges. So I label it because if I counter rotate and come up into this and I see exhaustion, it's a short for continuation down. And why? Because so far we have rejected this. And now this is where the new distribution is. This is the dividing line. So if I come up here and fail, I'm coming back down again. That's the theory anyway. And what happens, happens. So what do? We come up into it. What else do I come back to? Remember where these are coming from. The micro high volume of the fractal. Right here. So I take a short here. And I'm thinking, boy, I really am, in trouble on this. I get a scale. Remember where my support is down here? It is here. Let me show it to you. Where does it come from? This right here, chop, chop, chop is an auction. Break low, we go south. What do? We break high. That's what sets up covering and looking for the short again. Get short, get a scale. What happens? I get scaled. I'm looking for it to go down and take this out again. Other traders are long, and I'm going, maybe I should be long. You ever think that? And I'm going, well, I got to follow my plan because I take stops, they take stops. What's different? Oh, I want to be right. That's why you got to have a trade plan. And it's not one trade, it's all of them over a large sample size. So I come up where? Here. I'm out, I get taken out, okay? So I'm looking at this and I'm looking at this. These are same locations. Now I'm coming up kind of high and I'm conflicted. I'm going to tell you that. I'm going, what's going on? I know this is resistance here. And I know that's resistance there. Is this really much different? Not really. So right here, I'm looking at it and I'm thinking, and I am in a state of confusion. I see a seller here. I come back to this level. So I test a level and now I see a trigger. So right here, I'm back on the short. You can see it. Now, this is very hard. It's just maddening for me. Now, what happened at 9:30? You do remember, right? At 9:30, the first hours, the IB, it's called the IB low, and there's a 70% probability to take out the IB low if we make a new low after 9 a.m. So that had a 70% probability. So, and of course, I don't know, but if I have a 70% probability, and I did mention that to you, that's why I'm only taking shorts. And where am I going? Here. 38 actually was the level. And this is a higher time frame, low volume area. This is the same thing as the low volume area I was discussing here, except this is in a high time frame. It all behaves the same way. So this was my target. I exited my short there. Now, there's more. I took a long. here to come here. And I'm still in that trade, starting to beat my head on the wall. And it was a mean reversion trade. And I'm going to show what I basically did is I got out here 38. Well, I had a 38. I give it like 38 half. I don't get all of it because I have no clue. I can't predict anything. I trade with levels. Now, right here, so I don't know, sellers, going to zero, right? Who knows? I don't. I see the change in behavior here. I now consolidate. Let's look what I have. I had my sellers here, and I have my buyers here. And again, no clue. So right here, I have seller, buyer is here. Now, this is resistance. And when I break above them, if I was short, I'd be out of my short. Why? Why did the market not go down? These guys were absorbed, which we don't know, and the buyers took control here. When I see this and I come up over this, which is where the sellers were still in control, it's over for the short. Now it sets up get long. Where do I come back and check? Here. You know the saying, resistance becomes support. This is my long. I get risk neutral. This is my next target. And if I come inside here, I'm coming back to here, next target. Then I am holding to potentially come out the high. I got one on here, not a recommendation. That's my last trade, and I'm still in it. So what was the trade? Long to there, and then, as a good friend says, one for the ditch. And that one's just what we call the Hail Mary pass. And that is to come out the top and get here, or not. And why would I aim for this? Which we may never get there. I will aim for this because there's about an 83% probability, past performance, not indicative results, that we get there. And the shorts that are in here, we took the longs out. We got under yesterday's low. So what's the condition of the market now? Short. Are you going to go home either long or short over the weekend? Well, the sellers, if we got the longs out, then maybe, and no way to know, so not a recommendation, we'll now squeeze the shorts, and their stops are above this, the first hour's high. In other words, the current high of the day. So that's why the long is looking for this. And if it comes back and takes me out, it's a runner. Doesn't matter. It takes me out, I scratch the trade, and I go, well, that was nice. And I've already got, the primary trade was back to this. It's called mean reversion. What I am doing is, mean reversion is outside in trading, okay? I'm doing it in all time frames and fractals. When I came down here, down here, this is an outside edge in a high time frame. So if I come outside, I can revert back. I can come here, and I can, go further here, and actually even here. But because that's mean reversion. In this little time frame, coming outside and heading down here is also mean reversion. Now, if this is confusing, what's confusing is I'm in multiple time frames. So in the intraday time frame, this could be a short from here to here. In a higher time frame, this can be a long all the way up. So I'm doing is I'm transposing time frames, and I don't use time, it's fractal, and I'm trading inside them. So confused? If you are, I'm confused. Actually, what it is I think you guys think in time frames. All I've done is I think the same way you do, but my time is not a clock-based. It's a level-based process based on the participants, not on Fibonacci, Elliott wave, this, that, and the other thing, my moving average, my envelope. I don't even remember anymore because I've done all that stuff. And maybe there's new stuff, but there's nothing new. It's just put it in a pretty wrapper and we'll call it something different. The markets have been around long before there was computers. When I started, we didn't have PCs. You wanted to use a computer, it was a mainframe. So I'm just saying. But the market has always been the same. No matter what we try to wrap around it, it is the same. And the basic function of the market is to discover what this thing is worth. And that means it's going to try to figure out what is too high, what is too low, what's fair. And in our business, it does it in rotations, because every time we're rotating, we're looking for extremes. Is this too high? Is this fair? Well, what's too low? And that's what creates outside in, outside in, outside in fractals. So in here, we could be doing this. In a higher time frame, we could just be long, like I am, not a recommendation. I take stops, by the way, as well, and proudly. Why? It protects my account. And I am like a casino in the sense of the way I trade. My business is aligned with gaming because the casinos pay the gamblers. They have no control over the cards coming out of the deck or how the gamblers play the cards, right? So it's an uncertain, completely random environment. What do the casinos control? They control the games that they play and how they play them. And guess what? They play them exactly the same way. If the last hand they paid out $100,000 to the gamblers, they're not going to change the game. But what do? We bail out. We don't take the next trade. We get revenge trading. We lose our minds. Emotional stimulus. Casinos don't do that. And they pay the gamblers. And maybe give you the cocktail and a ticket to the buffet and still make a great profit and build bigger casinos. Maybe even tickets to Adele. Comp your room, fly you in. Come on, bring your cash. And maybe you'll walk out with cash. That's why the gamblers come to the table. And why? How does the casino experience paying the gamblers? Overhead and cost of production. Have you ever heard of a business that doesn't have overhead? Yet we are emotionally attached. We don't even see it like it's just cost of business. We see it like a failure. We didn't get approval. You got to suspend your needs here. You really are in a different business. And everything that works for you in the outside world does not work in this business. If anything, it's an obstacle because you're going to bring those habits and beliefs to this. If you play video games, which many of you have, including me, this is not a video game and an adrenaline, dopamine, endorphin fixer. That's not what this is. This is business. The business of trading you can learn. And that's what we do in Trader Lab. Why am I long? Well, I ask myself that question often. But the reality of it is because my plan says be long. That's the only reason I'm long. And that's the only reason I'm looking for this. Because of my probabilities and I understand how the market works. Not what it will do, what it might do. Because if I knew what it would do, I would just skip the stops, wouldn't you? You guys have questions. I'm going to come up for some oxygen, and I want to remind you, Bookmap has a special event. You need to verify your email if you're in YouTube and you want to come to the Bookmap Discord Trader Lab. Download the 60 PDFs of these structured trades I'm sharing with you. I'm also sharing some advanced concepts today that I typically don't get into, but here they are. You need to, in Discord, you need to confirm your email address. And this is a special pro trader webinar series. And these are guys that you're going to be really interested because the idea is that there's no one way to trade. Nobody's going to say there's a right way or a wrong way. The right way is very simple to determine. Measure it. Not your P&L. Measure each individual trade and determine if that specific quote trade or like a casino game has an edge. That's how you do that. And we do that in Trader Lab. You need to verify your email. So if you're in Discord and you're in Trader Lab and you haven't verified yet, in order to attend any of these events, you're going to need to verify, which of course you guys know. If you're in YouTube and you want to visit the Bookmap Discord Trader Lab community, Access the library of webinars, the 60 PDFs of these structured trades, and a lot more in the community. You do need to verify also. And you also get to do this. And don't forget, there is a free digital version that you guys can access, a Bookmap, and there's a link in the bottom of YouTube. By the way, this is what the PDFs look like. I'm not going to spend time. I just want you to see. They're pretty detailed. And I'm not a vendor. There's no course. It's a group of traders because it isn't what I do. It's what you do. How you take tools, massage them into something that you can relate to. I don't use an indicator, so what am I doing? I'm speaking the language of the market. Once you understand how the market works, why it does what it does, it's a language. Have you ever tried to learn a foreign language or play a musical instrument? This is what I am doing. And I threw away all the indicators because of the conflict, ambiguity, and random nature of them. Because instead of thinking for myself, I really offloaded, quote, the red light, green light process, if you will, to a indicator or indicators. And at one point, I had the belief that if I had more indicators and more time frames, I'd have more certainty. Because my psychology in our wiring is fight and flight. Saber-toothed tiger, go the other way. Well, our psychology and our primal wiring does not differentiate between a stop, which is pain, and a tiger. It cannot differentiate. So we make decisions and even have beliefs that are built on the primal wiring. But the primal wiring cannot differentiate this. So your intention, which is built on a conscious brain, if you will, an intellect, is overlaid on top of a reptilian brain. You crawl out of the primal ooze, and if you survived and the birds didn't get you and then eventually the tigers didn't get you, it's because you learned to differentiate danger and you went the other way. So before this intellect, and this is just call this theoretical, before the conscious mind and the intellect and all this other stuff developed, we had to survive, assuming it was just development or evolution. So under the hood is something that drives our decisions, our beliefs, and it all works good in the outside world. When you come to trader world, you are now on Mars. You might as well be on another planet because it doesn't work here. And most of us try to make trading world fit into our real world outside. This world, different rules, different behaviors, and the obstacle for retail traders. I believe if you come to Trader Lab, I believe, and it's just personal belief, I'm not saying it's going to work for you, anybody can learn to trade. Come to Trader Lab, you can learn to trade. Will you be able to trade? Whole different conversation. And if you're interested in the conversation, come to Trader Lab. You can use the link in the bottom of YouTube. Any questions? I'm going to come up for oxygen now. Thank you for your patience. There's a lot to talk about, and I have a very limited time. So I kind of try to run through this and so you guys to kind of get the idea what's going on. Well, Kiloton, I'm not saying indicators don't work. Let me put it to you this way. Indicators work at times. Everything works. This is one of the problems I found in trading is because when you see something work, you think this is good. I'm on the right track. I just need to make it better, right? Oh, look at that. There was a 20-point move yesterday. Ooh, how did that happen? Let me go back and look at that. Oh, I see. Well, if I had used a different envelope or if I had a different moving average or Keltner channel or I anchored a VWAP over here and look how it just touched it, or I used the standard deviation, keep going, right? Or my MACD, I had divergence with my RSI. It all came together. I'm going to do that next time. Get that 20-point move. Maybe you will. But in the meantime, you're going to get potentially, and I was going to say potentially because I don't know, you're going to get your 10 stops versus maybe that one win. And that becomes a losing process. Then you go back and retune and retreat to make it better. I call it trader groundhog day. So do I believe in indicators? No. Why? I don't need them. Can I use them? Of course. Do I need to use them? No. Here's the other thing. This is retail trader behavior. Most retail traders use multiple indicators. Why? Ask yourself, everybody, when we get a trading toolbox, do they have 150 indicators in them? Everything but the kitchen sink. And if you look close enough, there might be a kitchen sink somewhere. Why do they have all these indicators? Is there a reason for that? Is it possible that maybe if indicators actually had that traders could work with 4 or 5 indicators or 3, that's all would need to be in there? Why are there so many? And there's so many. I mean, you could spend the rest of your life on indicators. And that's what most retail traders do. And most retail traders, statistically, as you know, have a very poor outcome. Is it possible they're all doing the same thing and they think the answer lies in that hidden somewhere in the right mix of indicators and time frame? But that's logical, isn't it? How about it's a fallacy? Maybe. My opinion, I'm not saying it's your truth. It's my truth. And I've been doing this going on 45 years. And I don't have all the answers. I'm still trying to get better. I always will. This is my next target, by the way, right? 82% probability, remember? And just for fun, this. But this is really what I'm interested in. After this, it could do whatever it does. But where was my long that I'm sitting in? I don't even remember. It's down. I'm losing my mind. Down here someplace, right? So I got long out in here. That's going to be a 20. If it gets there, it's over a 20-point trade, maybe a 30-point trade. I don't know. I'm okay with that. Now, I know a lot of traders want action, the old dopamine and, I want to be a scalper. Hey, that's great. I've been there and done that. I used to be a high volume trader in the NASDAQ, 100 trades a day. I don't do that anymore. Not saying you can't. I don't. Because my risk when I put a trade on, whether I put a trade on here or down where I did on the longs, is the same. And my risk is usually under 3 points. It could be 3, it could be a hair over 3, but typically it's under 3 points per contract. For it to pay for me, I need range and rotation. Otherwise, I'm just swapping dollars. Why would I risk 2 points, 2.5 points to go here? I might risk it to scale, but not for the trade. No way for me. How do you know the answer to these questions? What should you do? The answers lie in a couple places. One is in the Trader Lab, because you'll understand how to build what the business of trading is and how to build a trade plan. The other part of the answer is in statistics. Casinos only play games that have an edge, right? They don't make them up. They don't do anything different. They don't have multiple inputs. Blackjack is not played with a different variation of how they deal with cards or number of cards or anything. It's just always the same. They don't make it up. Why are we making it up and impulsing and playing a video game? That's fine. It's fun. It's gambling. But that's not what Trader Lab is. Trader Lab is about business. Trader Lab is about career building. And no, it's not a shortcut. If anything, you're going to have to probably undo the things that you've been doing that don't work. Very hard. As I mentioned at the top of the stream, Peter Stottlemyre, who created Market Profile, he actually taught me the Market Profile in the mid-'80s. It was licensed through CBOT. And I thought, and I was using indicators, okay? And systems. I also built trading systems because I was managing dollars. So I really had a good idea about systems and indicators. I thought, and I was able to manage money with that process. But the thing was, it kept breaking down. So I was always re-optimizing, or let's use the real term, curve fitting. But I thought I would overlay my system with the profile and kind of bring two worlds together and have something better. I didn't. I ended up with something worse. So eventually what I had to do, it was start removing. Well, first of all, I stopped using indicators And it was very hard because when you spend, don't forget, for me, I started in 1980. So 86, 87. So I'm already in 6, 7, 8 years using indicators and systems at that point, writing systems. Then I started with the profile, put them together. And so I'm saying is, and I spent a couple of years that way trying to get it all to work. I'm very slow to change. I'm telling you, it's some, which I guess there's pros and cons to it. So I'm just saying is I couldn't let go of what I invested so many years in because I said there's got to be value to this. And what I was trying to do is validate the investment I made. Have you guys ever heard of making an investment and then you don't want to admit to yourself that it wasn't a good one, that you're just going to get, what's the saying? Oh, I'm sure I'll get something out of it. What I got out of it was resistance to change and wanting to get value from something that maybe was the problem. So I delayed taking action. And I want you guys to understand, I'm an open book. I tell you these things and share my experience because when I started, there was nobody for me to talk to. All my friends were floor traders. I didn't know anybody who was an off-floor trader. They were out there. But when I started in 1980, with classical bar charting, technical analysis, indicator-based, Wells Wilder was a new thing. I shared an office with George Lane. He created stochastics. So I'm right there in the same office with the guy who created stochastics. I thought that was the holy grail. And that was in, early 1981, 80, late 70s when he created that, and then I shared an office with him. So stochastics was brand new. I thought that was the holy grail and nobody else to talk to. Now, when you see a stochastic and it crosses over and the market goes in a direction, don't you think the holy grail showed up? That's what I had to contend with. And I'm only telling you this because it was new and I thought that was it. I don't know. And then as I was working with these things, they weren't working. They would work sometimes. And I'd say, well, I got to make it better. Look, this is great. Then crosses over and it's a reversal. Look at that. Well, what about all the other times it crosses over and it fails? What about all the other? And then it was, let's get divergence. That's the secret. Does this sound familiar? And I'm not against indicators. You got to understand. What I'm for is traders. I'm not against indicators. I do know the problems because I've had them myself. Does that make sense? Hope you're getting something out of this. How are we doing in YouTube? You guys conscious? Hope you don't pass out. Remember, there's a special series of webinars exclusively for Bookmap Discord participants, and you must register if you're in YouTube. Special invitation for you. This is going to be very cool, and it's coming up, but you have to confirm your email address. So there's a link there. If you go to Discord, you'll see verify. By the way, this is our target, right? And this is the long I have on from down here. So, and it was like 40, and I'm going to 70 on the runner. And I've already taken a number of scales. Let me put it to you this way. Last target. So the runner is, if it gets there, and it could go up here too. There's other possibilities. But this is the primary target, and then I'm done. The runner would be 30 points plus the ones in between. Now, this is an approach. I'm not saying it's right. But if you come to Trader Lab, you're going to find all different kinds of traders with all different kinds of methodology. Some integrate this in, some do. It's like a smorgasbord. And it's all about measuring and creating an edge. The things you think that work, you may find that they're guaranteed losers over time. And I use the term guaranteed very carefully. But guaranteed is not random success. It's over a large sample size or a random distribution of outcomes. So when I'm talking to you guys about a 30-point trade, which is random, but it just had, why did I take it? My plan suggested This was a high probability. That's why I was taking longs, remember? And, but my other part of my plan said 38. Well, what do you do? Well, I got two sides. Well, I'm trading both ways, or just trade one side. Doesn't matter. What's your plan? Now, I may never get here, but my suspicion underlined is, but before the end of the day, we're going to squeeze the shorts out. Why? The market goes up to go down, and the market goes down to go up. What did we do? Down to go up. Where's the stops? Opening swing high. Where do you think we're going to go? Opening swing high, which is the IB high. And then over 80% probability for this. If you're sitting short, are you going home short over the weekend? I'm asking you because you have to think like a retail trader, but not act like one. Retail traders, are they going to be getting long here? Or are they going to be selling more? Why am I getting long? Because the auction told me this was an outside edge. And what happens at these edges? We go through them or not, or never get there, right? Let's not go beyond that. But once I go through it, then I don't know. But when I come back, that's the long. There, and one left for there. Any questions? This is Trader Lab, and I believe anybody can learn to do this, but you got to put the work in. You got to realize you're going to learn a skill set that is different than what you're used to, even what you believe in. And I'm not saying you should change your beliefs. If you're a profitable trader, come on over to Trader Lab. Nobody's got a monopoly on, quote, the right way to trade. But most of us are learning a process that does not work. And we're trying to fix it. Trader Groundhog Day. That's what I named it. And it's because of me. Sorry, dry here. Because of what I went through. This is my experience, my journey. And why should you do what I did? There was nobody doing this when I started this. So it was the worst thing on the planet. There was no internet. There were no personal computers. You had to buy a book or pay, even then, a horrendous amount of money to go to a seminar. And I did that. I bought all the books. I went to seminars. I threw thousands of dollars away on seminars. I can't tell you I took anything away from any of them, except I was doing what I thought I should do to try to get better. Now, you guys have a different problem. You've got anybody who has a computer and gets on the internet is now an expert. Great. I'm sure there's plenty of them out there. How many have you come across? There's all these chat rooms. You can pay to learn. Oh, how great. There's the one indicator you need. This stuff has been sold since snakes. It's called snake oil. And when snakes were invented, they started with the snake oil. They still market to our primal needs, which is to be right, to succeed, to be a winner, and all that stuff, and get approval. And we'll pay anything for it. Human nature, by the way. I believe you can get a superior education, number one, in the Trader Lab, but also in the Bookmap Discord server. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, and a lot of real education, and there's no cost. And, of course, there's good chat rooms out there. There are good traders out there. You need to differentiate between what's nonsense and what's real. And that's hard for you to do because it's easy to, quote, get sold. Well, I'm not a vendor, and I've got nothing to sell you. So, but what I do have is knowledge and experience. That I share freely. I share 60 PDFs of these trades that I'm sharing with you here every day in the stream. You can learn to do this, but there's no plug and play, no quick fix. You're going to invest a couple years in development. If you don't have time for that, then you're just visiting, in my opinion. You want to become a surgeon? You want to play in the major leagues? Where do you start? You don't start playing in the NBA. You start in the school, in the schoolyard, you in the park. You start with your buddies. That's how you start. And if you become exceptional, you progress. How do you get exceptional? You learn the game. You learn, you practice, you reverse engineer, you do the work, and it is work. If you're not willing to do the work, don't expect a different outcome. This is not about you coming to Trader Lab. This is about you being realistic. If you're just throwing dollars at the market, you're just playing a video game. If you want to learn the business of trading, I believe you can learn it in the Trader Lab. Now, that's just my belief. Whether you learn it or not, it's going to be up to you. Whether you can manage your emotional state, that's going to be up to you. We spend a lot of time on that. And don't forget where we're going. Not a recommendation. Can you see the logic? Whether in your YouTube or even Trader Lab, why along from here to here? And if you're in YouTube, does it make sense why this would be along to here? What do you guys think? And please give a thumb up if you're visiting in YouTube. How are we doing in YouTube? You guys getting some from this? Please hit the thumb up. And by the way, remember, I've got to put this up here for you guys. If you missed this, you should. September 23rd to 27th. It's Discord only, and you must confirm. There's the link in the bottom of YouTube. And by the way, you got to confirm if you want to come to Trader Lab. There's no cost for any of this or the education that's available in Bookmap, in their server. Also, remember, if you come to the Bookmap Trader Lab, you can download these 60 PDFs. They got explanations, circles, arrows of these actual trades. Some of these are real, some of them are simulated, some are screenshots. I did these like 2020. You know, I'm not a vendor. I put these together because traders were saying, what are you doing? And after I answered that for myself, I said, well, this is what I'm doing. And it was very different. What I do is different. Why is it different? Because I'm not doing what other retail traders do. That's what makes it different. And that's why traders who are working, and we all struggle, by the way. Your struggle will never be over. Our struggle is operating in a random environment and being at every moment in an uncertain environment. Casinos are absolutely uncertain all the time. What is certain in a casino is the edge. How it manifests itself is uncertain. It's a random distribution. So they just play the games the same way. And it's not the last trade or hand, you see. It's all of them. That's how this works. It's all the same. If that is logical and that makes sense to you, then I invite you to come to the Bookmap Discord Trader Lab community. Bring your stuff. Show us what you're doing. Help us get better. Nobody has all the answers. It doesn't exist. But I will suggest this to you. More does not create certainty. More creates ambiguity and conflict. When you have multiple indicators, which one is it? Which grouping of indicators? If it's a little of this and a little of that, and it's smorgasbord versus fixed anchored inputs, in my opinion, that's not going to create longevity. In fact, there's a primer webinar that I did. You can access that. It's in the library of webinars in the Bookmap Discord Trader Lab. And you can remember, you can access the Trader Lab. There's no cost. It has over 30,000 views, maybe 30, I don't even know. I haven't looked. I should watch it again myself. It's only about an hour long. It talks about this in a broad stroke. And I also have the screenshots, and I go into some minutia. This process is not read a book, go trade. It's much more deeper because you need to develop an understanding not only of the business, but how the market works. It is not your indicator. It is the market itself. Why might we go there? And even higher, but that's besides the point. But at least here, but there. That's my target. Been talking about it all day. And our long was from. And this will be the end of my long trade up here. And I always have to say it's not a recommendation because this thing can go to zero in a moment. And it absolutely can. Questions, guys? I've only got a couple more minutes. So let's take a look. So for me, and I'm not talking trade management in this conversation at the moment. I'm giving you, I can, and I do that in other streams, and they're in the library. You guys can access many different higher time frame integration, which is what I'm talking about somewhat here today. I trade in what's called fractals. You guys think of time. I don't use the clock. Clock has nothing to do with this. Now, there are times the clock is important, like the open, the close, EU close. There's a couple odds and ends, lunchtime when the volume drives up, but that's neither here nor there. But the structures are not based on the clock. They're based on the interaction. So what I'm looking at is not 5 minute, 2 minute, 1 minute. It means nothing. For me, what I'm looking at is interaction between participants. What happened right here? Buyers are here. Sellers are there. We break above the sellers, the passive side. What does that tell me here? The buyers are here. The buyers are here. What happened to these sellers? They were absorbed. There's nothing saying it's not going higher. It can rotate. Buyers are here. Here. Sellers were here. The buyers absorbed them. Sweep. What do I see here? Going up. I see sellers right here. I'm seeing sellers. I know there's stops here, and my target is here. Maybe I'll get my target, and then I can actually then drink some water and get some oxygen. I hope you're getting something out of this. This is how we trade in TraderLab. CB, hi. I stream live every day, Bull Bear, and you're all welcome, in YouTube. But if you want, I do ongoing narration, and I support the community. And not only does the community, I support the community in the Bookmap Discord TraderLab. These inputs are in TraderLab, and it's not just me. The traders in the TraderLab support me. That's the whole thing about this. It's a community. It's not about me at all. I'm sharing 45 years of trading. I think that helps, because we all do the same thing. It's just a matter of, can you kind of jump ahead of other traders? Because we have a limited amount of resources. That means time and call it capital, unless you're so fortunate to have a printing press in the basement, which not yet. So Federal Reserve's got one, but we don't. So until that happens, we have limited opportunity here for retail traders. How can you accelerate the learning curve? And if things you're doing, the collective you, don't work, and we only think it's a matter of tuning and tweaking, that it might not, and I say might because everybody's different, might not be the solution. That might just be Trader Groundhog Day. So the TraderLab community is a group of traders coming together. They help me as much as I help them. And I'll tell you one thing. When it comes to trading, there's no room for ego. You will not feed your ego. You will learn totally what humility is. Ego will take you out of the business because you actually think you know. How about knowing you don't know? What is the more powerful position? Ego, predicting, or knowing you don't know, which releases you from the emotional state of proving you're right? How about accepting there is no right, there is no wrong, there's only maybe, and a vetted structured trade plan? And at the end of the day, how do you measure your results? It's by following your plan, not by the outcome of the current trade, the last trade, or the last sequence of trade, or the next trades in the future. It's about what did you do? If you have an edge, do casinos change the games? No. Do they make them up? if somebody walks out with a suitcase of cash and then they don't play the next hand because somebody got paid? No. They do the same thing. Do they shoot the dealer if that somebody walks out with cash? No. The dealer shuffles the deck, plays the same game the same way. It's called anchored inputs. It's in my primer webinar. That's our business. May not be what you think it is. I understand. You may think it's a mix of indicators. I understand. I understand. I have a different experience, and because of that experience, I now have a different result. If you want a different result, you can either keep doing what you're doing and try to fix it, make it better, or come to Trader Lab. Find out what you're doing now that works and start eliminating the stuff that doesn't, and maybe add some other pieces to it. There's no one way to do this. But you will find, I believe, that trading doesn't have to be complicated. It is random. Why add complexity and randomness together? Why make that mix when you can actually remove ambiguity and conflict and try to see it as clearly as possible in spite of it always being random? That's Trader Lab. By the way, if you're in Trader Lab, remember this stream is available exclusively to you to review, reverse engineer, etc. If you're in YouTube, be sure to subscribe to the channel. Give a thumb up on the way. And in fact, copy this link and forward it over to your trading buddies if you think they might be interested in what this is all about. And now look at what we did here. We got our sellers right here. There's our sellers. These buyers were absorbed. Now, the question becomes right here, is this the high of the day? Or are we just getting profit taking here, rotation, and then we will come back and squeeze out the rest of the stops above here? What do you think? Anybody have an opinion? Yeah, CB, the level I'm targeting is this, the ETH volume point of control. Think of it like a retail price, because high volume is retail. It's just like you buying a can of tuna at the store. It's $1. That's where the buyers and sellers agree to do business. So it's high volume. What the market tends to do, and this is all about what we do in Trader Lab, how does the market work? We need to understand what this thing is doing and why is it doing it. Well, it's trying to figure out pricing. We know this was too high in the ETH because we left it. But the nature of the market is to also find out what's too low. If we find too low, and this was the retail price in today's developing RTH, and that's why it was a target coming up, if it's too low, now we're going to come out and try to find the outside edge of what's too high. Here's the possibilities. We come up here and we come back here. Not so good for my lawn. Or we rotate here and then we come back and check this, which was the retail price in the ETH. So the market is speaking. It's like a language. Remember, oh, this is too high. But what does the market tend to do? Check. Is this really too high? This is like the supermarket. They might not do this anymore. There used to be price check in aisle 3, and they send a guy down to say, is that really $3 or is it $5? So they'd send a guy down to look at the label, the pricing. This was too high. The market left it. We went down, and now the nature of the market is to come here or not. It doesn't have to, and we have until when? Close. And in the meantime, we can come back here. We could do whatever. Neither here nor there. But that's Trader Lab. That's trading in fractals. That's auction market theory using order flow. This tells me right here I'm going to get a rotation. Now, depending on my time frame, I could be exiting right here because of this. This is a short. Now, by short, let me clarify. Subject to time frame, it's a short or a counter rotation or an exit. And it's right here. Anyway, guys, please give a thumb up in YouTube. Click the link if you want to In the bottom of YouTube, come over to the Bookmap Discord Trader Lab, download the 60 PDFs, as well as access the community and the library of webinars. And if you want to attend the special Pro Trader webinar series, you need to confirm. It's going to be in Discord only, so you got to confirm your email. Make sure you're not a spammer. Thanks again. Please give a thumb up in YouTube. Copy the link if you want to watch this over the weekend. Typically, they're not available if you're not in the Trader Lab, so you can reverse engineer this, circles, arrows, screenshots, and build out your plan if you're interested in being in the business of trading. Thanks again, guys. Thanks for visiting Trader Lab today. Hope you got something from this. I know I was in a bit of a different element today with multiple time frames. I try to keep it simpler, but sometimes you just got to do what you got to do.